Brian, if you want to say some words at the very beginning, you and or Andrew,
Yeah,
feel
for
free.
sure. I'd be surprised if Drew's on today. I think he's got food poisoning or a bug. The poor
Mm,
guy. He was sick a
oh,
couple weeks ago, and then and had a bad night. So I suspect. I hope he's not here because he probably needs bed rest and fluids. But
gotcha.
yeah. I'm Brian Ehrlich, the CEO of Innovative Mortgage, and I'm thrilled to have this opportunity to introduce myself and even more thrilled to participate in this kind of presentation. Uh, Pam, you are an amazing MLO. I know you don't seek the compliments or seek the praise, but it has to be spoken. The things you've done for this industry as a professional and the things that you've been involved with have added a great deal of value to the mortgage profession. And you guys, if the folks that are on this call, if you don't know who Pam is, you need to look her up and do some digging because she's been involved, been a representative with HUD. She's been represented with our state organization. And those are just two of the many things that Pam has done. And she's an accomplished MLO as well. And today we have an opportunity to participate in this awesome event because Pam put this together with this awesome team of individuals that will help enable us learn more about DPA stuff, which is very important to the industry, especially in this day and age where it's so expensive to buy a home and budgets are crimped and funds are tight. So I'm very pleased to participate. I'm very pleased to have an opportunity to maybe do a little intro and short bio for you, Pam. And we love you and we thank you for this putting this together and being the amazing person you are.
Well, thank you. And that anyway, thank you, Brian. And we have got an outstanding bunch of people here. And just to let you guys know, this presentation is being helped with by downpaymentresource.com, and Down Payment Connect is a tool that I use on a daily basis that they have. And I would like to introduce the people at Down Payment Resource because I couldn't do down payment assistance without them. Sean Moss is the vice president of Down Payment Resource. Tracy Hacker, and I think Melinda might be on the in the background making things happen here. And then we also have Tim Higginson, who's a one of our fellows that goes to the different lenders that want DPA, and we kind of get together and brainstorm on how we can make that happen. Um, but without further ado, I'm going to, oh, and I'd like to say thank you, Sharif, if you're out there for bringing this up at the last UWM get together, which was awesome with 57 loan originators. We're going to come back with more in April. And it's because of Sharif asking to have this done and put that ball in motion is why this is happening. So thank you, Sharif, if you're out there. And without further ado, Sean, can I just you go ahead and take it away and show the down payment resource and down payment connect?
Okay, good deal. So I'm going to share my screen and just before we move any further here, can a couple people from the audience tell us if you can see our screen? So Siobhan, Mike, Steven, Tammy, can somebody just chime in and chat and tell us you can see the screen here? And okay, yes. All right, good deal. So our company is called Down Payment Resource. Our focus, our mission is to track and monitor all of the homebuyer programs across the country, deliver that standardized data in a simplified way to you, the professional lender, and the real estate community, and ultimately the consumer to essentially make it easier to uncover down payment programs, uncover and take advantage of the opportunities they present, and ultimately to originate more loans and to help more buyers into homes. So that is down payment resource. Now we're going to talk specifically about one particular part of our product suite, one product called Down Payment Connect, or DPC, if you hear us refer to the acronym. I'll try not to use acronyms here, but so Down Payment Connect is the product that Pam is mentioning. It's a suite of tools that help you guys as originators uncover down payment programs, understand how they work, lay out a map of what you have access to through various wholesale partners and so forth, and ultimately originate more of those loans with guidance from our data as to how to do that. So I want to start with just the simplest way to find down payment information. Anyone can go to downpaymentresource.com and do a search for free to find out what types of programs are available in the area where you want to do a search. So I'm here on our public facing website. Let's say I'm a home buyer. I click on this big Find Down Payment Help button and I can start a search here. So we have to have a location, but that's the only thing we need to know. Anything else on this search form, excuse me, is optional and it's just going to personalize and refine the results of that search. So typically, when we're talking about a borrower or a prospective borrower, they're pretty early stage. They don't have a specific address in mind. They're not under contract. We hope, right? We want them to understand and be aware of these opportunities as early as possible. So hopefully they're becoming aware of these opportunities before they're signing a contract on a home. That's going to make your job easier too. So let's just say I want to find programs in Pasco County. So I'm going to start searching here. I'm going to select Pasco County, and you can see this count of programs starting to populate. Now, if I wanted to, I could enter a number of units here. I could enter a price, let's say $350,000. That's where that's the price point I think I can buy a home at, or I want to purchase a home at. And you can see that number changed because we account for things like purchase price limits of these programs. And then household size, household income. These are factors that impact eligibility for down payment programs, whether or not you're a first-time home buyer. Now, I'm going to say I currently own a home just to prove the point that there are still plenty of opportunities out there for buyers who have currently or even have recently owned a home. This is not just about first-time home buyers. So I go on down the list. Let's change that. Let's say I owned a home, but it was more than 3 years ago. So basically, I'm a first-time home buyer. And then there are other things that might increase this program count, like military service or being employed in certain professions. So think Florida Hometown Heroes, right? If you're employed in certain professions, when that program is funded, that opens up the Hometown Heroes opportunity in addition to all the rest of the Florida housing state programs. Now, when I'm done, I go on to view the results on the page and I get a little bit of information about those programs. Anybody can do that. However, if you are a loan officer or a real estate agent, but if you're a loan officer and you want to take that to the next step and turn this into a marketing opportunity, a consumer education and awareness campaign, and ultimately lead generation to grow your pipeline, that's where we offer Down Payment Connect. So you go to for professionals, loan officers, and that's where we are here. Down Payment Connect, I'm going to skip over some of the content here. And in fact, I'm going to throw a link to this page in the chat. So if you guys want to check out Down Payment Connect as we go, feel free. But I'm going to jump right to this feature grid. There's some information here about what Down Payment Connect is and offers. Essentially, you get your own landing page, just like what we were looking at a moment ago, but unique to you that you can use in your marketing and you can present to consumers so that they can do a search for the down payment programs that you offer, that you have access to, that you can originate for them. So it's personalized not just to the consumer doing the search, but their results are catered to the programs that you have identified that you have access to and can help them with. And I'll explain that more as we go, but that's important. So you get your own landing page. There's no lead buying here. You're not buying leads. This is $39 a month per state. So most of you are probably just doing business in one state. Um, but you can generate unlimited leads. You can use this on your website, email, social media, and so on. There's no limit to where you can use your landing page. You also get a directory of all of the programs available in your state or states. And I'll show you how to kind of filter through all of that and identify the programs that you have access to that you want to show to consumers so they don't just see everything out there, they see the programs you specifically can offer to them. And then you get detailed guidelines to help you, not to use a fancy word, but to operationalize those programs. What do you need to know? What does your processor need to know? And so on and so forth. And then there's some other tools that come with Down Payment Connect. But here's a sort of a feature grid at the bottom of this page. And again, I already shared the link in here. But you get all kinds of marketing resources. We're going to look at some of that. Ideas for using this on social media to engage with consumers, prospective home buyers, and then some more professional tools, how to uncover programs, how to sort through them, how to identify the ones that you offer, and so forth, and then an option to subscribe. Now, before I go on, I'm going to show you how the consumer experience looks, and then I'm going to show you how your experience as a Down Payment Connect subscriber looks, and then think of that bigger picture in terms of driving more business, utilizing more DPA programs, getting better at DPA, working with your processors and other stakeholders and other fulfillment team members to execute on DPAs. So before I do that, though, I'm going to put a link to this in the chat as well. This is our Facebook group called Down Payment Insiders, and I realize we're putting a lot of links in there. If you started with one thing today, I would go to Down Payment Insiders and just join the community. This is a community of 14,000 real estate agents, loan officers. There are some housing and education providers, home buyer education, housing counselors, and they're just sharing best practices. They're sharing challenges that they've had with first-time home buyers and how they've solved for those challenges. They're sharing marketing ideas, ways that they have successfully engaged consumers with just broadly the topic of down payment assistance programs. So we would encourage you to join in there, chime in, teach, learn, listen, however you want to participate in that community. But it's a great resource and a great place to start. If, for example, you are relatively new to down payment programs, it's just a community there to support you, help you, give you ideas, and kind of coach you along. Now, with that out of the way, let's look at the Down Payment Connect subscriber experience briefly, and we're going to come back to this. This is your dashboard when you subscribe to Down Payment Connect. Now, this is going to get a facelift here in Q1, and we're going to be offering kind of a new user interface and perhaps some more tools, tutorials, help, marketing content, and other forms of help. But the first thing here is your landing page. Now, this one's mine. It's unique to me. Any search that happens on this page goes to me and only me. So I'm gonna take that and I'm gonna show you that consumer experience. So we're gonna start our search. Same questions we looked at earlier. I've typed in Tampa here. So let's actually we're gonna move around Florida here. My whole demo is set up around Florida. So we're gonna look in Orange County. This is all unique to me. My name, my company, this is made up, but my name, my company, my NMLS, my branch address, that's all part of the subscription process, and then it just displays across the board. So you have a compliant page. The consumer does their search. In this case, I said Orange County, and I entered a price. I didn't enter anything else because I'm just early stage. I'm poking around. I saw this information or access to this information on your website, and I decided, okay, I'm going to do a search. I'm going to see what's out there. What are these down payment programs? Let me learn a little bit more. So I click on Get Details, and sorry, go back a step here. So I click on Get Details, and I land on this contact page. I didn't see the list of programs. I don't know which programs these are, but I know I could get up to $70,000 in help from these programs. That's a huge boost to my home buying capacity, my home buying potential. So the idea of this product, and it's called Down Payment Connect because it's literally meant to enable that consumer, that aspiring home buyer, to connect with you around the topic of down payment programs and to give you the opportunity to start that conversation and win that business from that buyer and their agent. So I fill out this form. I haven't seen any information about those programs. I click on Get Program Details, and I'm essentially, as a consumer, saying to you, the loan officer, the broker, hey, this is interesting. I saw your down payment information. Maybe I read some more intel on your website. I did my search. I want to connect with you. Once I submit that form, they get a thank you page. All of your information is presented to them. And then they get the lead. You get the lead. So let me show you that. Immediately, this comes to you. So this tells you their contact information, where they were looking to buy a home, the price if they entered one, and all of the programs that they found that you offer, that you have approved. And I'm going to show you how to do that in a minute. Now, at the same time, the consumer finally does get a list of those programs. Looks like this. They've got your contact information, and that's the only contact information in here. There are no other links in this email. So they now get the names of the programs and how many dollars they could get from each program that they might be eligible for, and your contact information. You've gotten their contact information, the connection is made, you have the lead, and you run with it from there. So let's go back to our Down Payment Connect dashboard and let's look at some of the other tools that you have access to. The first thing that you would have to do when you start using Down Payment Connect is go to the DPA directory. This is where you can see all of the programs, whether they come from a city or a county or the state housing finance agency. We have wholesale DPA programs in here. We can add more of those as we find out about wholesalers that have their own unique DPA products. We know that DPA can be sometimes harder to access for brokers than for retail lenders. And so we constantly add those wholesale DPA providers or options as well, in large part due to Pam's efforts to uncover those and share those with us and introduce us to those providers. So we can scroll through this list. You can see in Florida, there's over 200 programs. We have 256 programs in Florida right now. I can scroll through and I can see all of them. I can open up any one of them and I can access all kinds of detail about that program. What are the repayment terms of the program? Is this a deferred loan? Is it forgivable? Is it a grant? Is this repayable? What are the borrower qualifying criteria? FICO, citizenship, LTV, homebuyer education, and so forth. Where is this program available? What are the property characteristics? What's the maximum purchase price if there is one? What is the application process? How do I reserve funds? What do we do at closing that might be different, post-closing, and so forth? Do they charge any fees? Are there any documents that I can look at? How has this program changed over time? I can go down to this history section and I can see all of these different change events for this program. And I can open that up and I can see old and new values and essentially how that program has changed over time, which is what we are doing on your behalf. We are tracking and monitoring the evolution of that program. So you're always looking at current state, but this gives you a look back in case you hadn't used that program in 3 months. Well, you can look back and see, okay, did anything change in the last 3 months that I need to be aware of? Did their income limits go up? Did they offer more assistance? Did they change the repayment terms? So once you've identified programs that you like, then the question is, do I have access to it? Through which wholesale partner can I originate and deliver this program? That's when you can go over here to this column that says approved. You can open that up. You can approve that program, and only those programs that you mark as approved are going to show up to a consumer when they do a search. So until you do this, the consumer can't uncover any DPA programs in your search. You have to tell the Down Payment Connect system which programs you offer that we can then display to the consumer. When you are approving programs, you can also add notes, overlays, whatever you want to call this. You can add notes that show up to the consumer. You can add notes that are just for you internally. So access through XYZ wholesale company. That's how I can originate this. But I can also add notes here. And Pam, maybe you want to chime in. Like, what are the kinds of things that you add here when you're approving programs?
I usually add in all the stuff that they tell me I can't do so I remember the next time. But this is probably one of the most important pieces of Down Payment Connect, because when you get going on this, you're looking at so many programs and you forget some of those tedious details. This is on the top of your directory that you get. And it reminds you, oh yeah, I can only go up to a 45 on that back. Or yes, this one does allow stacking. So this is invaluable.
Yep. So I'm going to add some notes here, and I can add as many as I want. You control all of this. This is all content as you want it displayed or notated, and then submit that. That program is approved. Now, anytime I go back and look at it, I'm going to see my own notes here. And if you want that to display to the consumer, then you can do that as well. So, the other thing I want to show you about the directory is the filters here. So you have the ability to break this down geographically by market. Maybe you just want to see programs in Pasco County. So let's update my filter. And I'm sort of administering my list of DPA programs, right? So okay, well there's 78 programs available in Pasco County, national, state, local, across the local market and so forth. That's going to be nonprofits, wholesalers, Florida housing, and so forth. So I can scroll through the list and I can pick any one of these and open up the details. I can approve any one of them, note who I have access, through whom I have access to that program. But I might want to drill down further. And I won't go through all of these, but you can filter by provider type. Maybe you just want to see those wholesale lender products. Maybe you want to see local municipalities and which programs the cities and counties are offering, like SHIP in Florida. Um, you can break this down by program type. Okay, maybe I don't want to see all this other stuff. Just show me seconds and show me grants. That's all I want to see. I want to see tried and true DPA programs. I can break this down by funding status. I only want to see those programs that are funded today because that's what I want my focus to be on. I'm not concerned with showing all the programs I have access to. I want to show the ones that are funded today so consumers see opportunities they can get at today. And then there's a lot of other categories of filters here. Pam, is there one or two maybe that you use frequently that you want to point out?
The eligible channel.
Okay. So eligible channels here, that tells you you can filter for which programs are available to wholesale brokers essentially through wholesale partners. That means which program providers say that they will allow brokers to originate that program. And then separately, which programs do your wholesale partners accept? That's a different question, but right here we're saying the program provider has indicated they will allow brokers to originate that DPA, not just retail lenders from banks and IMBs and so forth. And then all kinds of other ways to parse this information by borrower eligibility criteria, programs that do or don't have home buyer education requirements, the application process, who's applying, me as the lender, or does the consumer go apply and bring their approval letter to me? Property eligibility by unit count. Do I have a borrower looking for help with a duplex? Okay, well, which DPAs are out there that allow for 2-unit properties? So there's a lot of ways to slice and dice through this, and we make it super easy to do that with this series of filters. And then ultimately, you mark those programs as approved that you have access to and you want to offer to consumers, and that's what displays when the consumer does a search. There are other tools and resources here that we can go through in more detail, later if you subscribe, and we have other ongoing webinars, but you get that same search experience, but you can just do ad hoc searches. So you can plug in Orange County and you can go just straight to the results and you can say, okay, well, this is what the consumer would see if they plugged in that information. I'm going to pick up the phone and call somebody that I talked to last week that's not responding, and I'm going to bring up these programs. And you don't have to go through like contact forms or anything like that. You also have a ton of marketing resources. You've got some social media training modules that give you ideas for how to put this out there in front of consumers, which is what I'm going to get to next. And then we also offer you all these different marketing resources, flyers, graphics, images you can use across social media platforms. There are, here's the customizable flyers in English and Spanish. There are video tutorials, access to webinars. There's another link to that Down Payment Insiders Facebook group. All of this on that marketing resources page, linked directly from your Down Payment Connect dashboard. Now, what I want to show you is how do you get this in front of consumers? This is great. So I've subscribed. I've found, 10, 15, 20 different programs I have access to across my market. Now I need to get it out in front of consumers. So I'm going to give you just a small few ways that your peers have done so. So this is a post from an agent a couple months ago, real estate agent, simple graphic. And if I open this up to see the rest, super simple post, 3 sentences and a link. That's it. Do you need down payment help? Get up to 30,000. Here's the link. I'm going to show you. I'm going to give you a path to find those solutions, and you're going to connect with me, and we're going to have that conversation. If I scroll through this list here, Marley here posted in September, hey, thinking about buying a home? You may qualify for special programs that can help you. I have a tool that lets you quickly check your eligibility. Here's a link to it. Do your search. If you have questions, reach out, and you're going to get the lead anyway when they fill out the down payment search. If we scroll down again here, thinking about buying a home in Tampa, this was just a few days ago. Um, Many buyers don't realize these programs are out there. 2 minutes, do a search. Here's the link. Whether you're a first-time home buyer or not, uncover the options that are out there. That's great. So a couple more sentences in that post added a little bit more education for the consumer and expanded the audience. So somebody who does own a home currently sees this and thinks, well, I didn't know that. Who would have thought that I could still access down payment programs? Thank you, Daniel, for telling me that. I'm going to do a search and I want to talk to you. Now that's social media. Here's a couple of examples on a website. So we're on a loan officer's website. You probably on your site, you have the standard calls to action. Apply now. That's the goal, right? We want that application. Or maybe they're not ready. Contact me. Let's have a conversation. Okay, but maybe they're not ready for that either, or they don't think they are. And that's the problem. They don't think they're ready to have that conversation. So we tell them, hey, you're looking to purchase, here's some education. Looking to refi, here's some education. Down payment assistance. I want to tell you about these down payment programs because you, as a first time home buyer or consumer, probably don't know. So do a search, look for what's out there. Same idea here. We're on a loan officer's page. There's the apply button. That's the goal, right? But not every consumer is ready to do that. And before they bounce, we want to try to capture them by offering a little bit of education about these programs, a little bit of awareness, drive them to that search, connect them to you, and let you start that conversation. The last thing I'll show you here, we partner with MLSs as well, all over the country. Some of the biggest MLSs and most of the biggest MLSs in the country, including Stellar MLS in Florida, as well as Real MLS in Jacksonville and Space Coast Association. They're all partners of ours, meaning real estate agents have access to this information. And when they are listing and selling properties in their MLS, they can see that down payment assistance is available based on the location and price of a newly listed property, and they can send that out to consumers as well. But that also means the real estate agents are becoming aware of these programs. And the first question they always ask us, how do I find a loan officer that can help me with these down payment programs? Always the first and most common question we get in any webinar we do, any training we do. So just know that your local real estate agent partners are becoming increasingly aware of these programs and they need help, and that help is you. So, Pam, I covered a lot there. I'll pause and see if you want me to cover anything else, and then I'll stop sharing and we can move forward here.
One thing real quick, if you could show them the front page of when you go into the DPA directory, because it shows you the uh, at a glance. You've got the programs on the left. You've got the type of program. If you're wanting to do ship throughout the areas or the state, just hit that type at the top and you'll get the whole list of whatever you've pulled up. If it's for your county or the whole state, you'll get all the second mortgages, which are mostly the ships or the things that we can use, the DPA that we can use with the first mortgage lender that allows us to do that. And then you've got your maximum assistance there. You've got they update this information every month. So this tells you how many days ago it was updated in the changed section. And then if it's active or inactive, you can see it as soon as you get in a down payment connect and go into the directory. And then the provider type, if you want to click on that and get them all together, you can see who are the wholesale lenders that are doing DPA that are in here. That's
Yeah,
that's easy.
and one point of clarification, we do update these monthly, yes. If it changed recently within the last month, there will be a badge here. If it didn't change, we still updated it, and we accounted for the fact that nothing changed. But if it did change, we actually show you which data fields changed, and then you can open up and learn more about that change. All right, so Pam, I'm going to stop sharing, and I'm going to hand it over to you for a few minutes.
Okay, let's see. I'm going to go to a page that, can you see this page?
Not yet.
Not yet. Oh, geez. Okay, let's see, share. Okay, could be here. Okay, now can you see it?
Yep.
Yes.
Okay. And Ron and Teresa, if you guys can both be on board, we're going to have you on next. And Justine Vega will also be on, or Justin at her office will be on. This is a page that is infused with everything that I use pretty much on a daily basis with Down Payment Connect and for when I'm talking to people about down payment assistance. And for those of you that know me, pretty much I do just down payment assistance. It's that much out there. This is we've got our guest speakers on, and we'll go back to that in a minute. But what I want to show you are the four things, the four DPAs types that I do, and in what order and why. The first and best DPA, as far as I'm concerned, is when you can get a community second that can couple with your wholesale or first mortgage. The reason for that is it gives you the highest dollar amount. You can get the best first mortgage with your first mortgage lender because you can use the down payment assistance money to do that. So you can buy down the rate, you can buy down the loan amount. If the borrower's got a good credit score, you're going to be able to put them into a conventional loan and maybe buy off the PMI, which I do a lot. And then obviously pay their closing costs. The second best is the state hometown hero. This is in Florida, and I'm sure there's this type of financing in other states too. But the hometown heroes and the bond loans are the second best option because their income criteria is higher than the income qualifying criteria of the community seconds. So that's my second option for you. Then the third option is the wholesale proprietary DPA. And the reason why that is a great option is they don't have a maximum income limit. They don't have first time home buyer requirements, and they usually have minimum scores of 600 if you can get an AUS approval with it. So they're the third option. And the last option is everything else that like for renovation, although there are community seconds that do the renovation as well, renovation, repair, multifamily up to 4 units, financing on ADUs for Indian tribes, a lot of grants there. And then there's just grants, period, that I put under the number 4. So what I've done is I've broken this out for these 4 areas for you. And this is not complete, but this is what I use. So when loan officers, you've got other lenders you see have something on these 4 sections of DPA that is most useful to us, let me know and I'll put them on the list. Obviously the first mortgages, we've got the criteria for both the first and the second. And then the Florida Hometown Heroes and the Florida Bond, which is a combined first and second. One lender underwrites the first and the second for you. So it's a little bit easier. The first mortgage, you do have to know the criteria of the first mortgage and then compare that against the criteria of the community second. These are the lenders available for the first mortgages that will allow a community second on them. The lenders that do the Hometown Hero and the Florida Bond are here. And then I've got the proprietary lenders here and obviously the bullets of what they're good for. And then the other and the lenders that you can use for that as well. If there's one thing I want you to take away from this today, and this is the main reason that loan officers shy away from down payment assistance, because I think that they've had this experience, had a problem, and they don't want to do it again. There are 2 ways you've got to figure income when you do a community second. You've got to figure the income based off of HUD income levels and how it compares to the number of household members in a house, even if it's the kids and adults in there, the full household member amount. And then you also need to know, you see the AMI, this is area median income. These are HUD area median income levels for the city, the county, and the state programs, which Florida Bond and the Hometown Hero are state income driven. Now, the what normally happens is you see a breakdown on the ships and the city. There's a lot of cities. There's about as many cities as there are ship programs out there. So, and DPC shows you that. But basically, what it does is it breaks it out into the income levels that those DPA programs will give monies for. And over here on the left, you see this the income level and the maximum assistance. Um, the reason I'm showing you this is you've got to get both right. You've got to get the qualifying of the borrower by the number of household members compared to their household income. Here's the key difference. The ships, all of the state, city, and county income levels, they are going to look at income from today forward. So the best way for you to know an approximate amount of how your borrower is going to qualify for the income maximum assistance over here that you see is take the last 30 days of pay stubs, add them together gross. And I'm talking overtime, commission, shift differential, bonuses, everything, even if they haven't had it for 2 years. You take that whole income, you multiply a month of those pay stubs by 12. That's the income that they're going to be looking at under these AMIs here for the HUD income levels. So that's the first step. Then the second step is that you calculate the income the way that all of us know how to do a mortgage. The 2-year average plus year to date, 1-year average year to date, and then year to date, you get your numbers, you look at the most conservative of those three, and that is the income that you're going to give to your that's how what you're going to put in your loan application as far as the income to use. So just to be clear, this number 2 is the income you're going to qualify the borrower for the program. This for number 1 calculation is determining the dollar amount your client is going to get for the down payment assistance from the usually the county or the city or the state. That is most important because most of the time people we don't know to look at this number 1 calculation. And what happens is you overshoot. You're giving the borrower a lower income because maybe they're not getting overtime or commission or bonus or shift differential long enough to be able to average it. So you don't use that when you put your loan in, your mortgage in, but they do count it when you're trying to figure out how much you're going to get for that ship amount, which is over here. And if you go through the DPC, you're going to see unbelievable numbers. I mean, in Broward County, and they're given over $75,000, $100,000 for down payment assistance, and you have the ability again to buy down rates, buy down the loan amount, take borrowers out of a conventional MI situation, and get them a whole lot of down payment assistance from those city, county, and state DPAs. So wanted to let you know about that here. You need to definitely look at these 2 ways of figuring income and how much you're going to get for DPA. I wanted to just briefly say we are seeing a lot more variable income where people are not working full-time hours and their hours are fluctuating from pay stub to pay stub. They're not full-time. They usually get overtime, shift differential, and bonuses. And there are ways to calculate that. My advice to you is to get a verification of employment up front, and there are variable income calculators. MGIC and Essent has one, and also UWM has an awesome one. UWM's even breaks out the FHA, conventional VA, and USDA income, and you'd be surprised. Sometimes you have a better income in one loan type than the other. Um, so that we're getting a lot more of that. If you've got the regular 40-year work week, you're good. You can figure out the income a lot easier with that. But this is a lot to do with the in, inconsistent income that we're seeing come about. Now, next, I'm going to show you what I do to figure these out because these DPA are coming in quick and these people can't wait days and days for us to analyze this. So I'm going to just show you how I do it. I assume that everybody is good until I see their credit report and the credit score. And then I know that if their scores, maybe below a 640, they may have to do some work on their credit or not, because you could do a loan with a wholesaler and go down to a 600. But basically, what this is telling you in the pull tri merge credit, if you have an issue with credit and you want to try to help these people get it increased a little bit, Credit Expert is the only credit tool that I use because it tells me exactly what to do and how long it's going to take to get these people qualified. And UWM has a Credit Expert in their system, and it's half the price of Credit Expert if you use it through the credit reporting agencies or you have your own subscription. So this is all about credit, this first one. And just a point of reference too, on the community seconds, a lot of them do not even count debt. They don't even look at it. They could care less. They're looking at income. This is more for your first mortgage needs, just to give you just a little, what Credit Expert does. Second is I analyze everybody thinking, could I get the community second on their first mortgage? And the reason I do that is obviously it's got the highest dollar amount and I can get them the lowest rate with DPA, because you're not getting the step on because you've got a combined first and second that lenders need to do to sell these loans on secondary. So that's what I do is I look at what's the criteria that they can meet for the community seconds. A lot of times you're going to find off right off the bat, especially if you've got a family of one or two people, their income is going to be too high for the community second. So then you go to down payment resource. And a lot of times, when clients don't have time, or I'll send them to downpaymentresource.com just to get an idea of what they could use, or they call me on because of my landing page. And I at least know a little bit more information about them commonly to help them with Down Payment Connect. One thing I wanted to tell you, the community seconds with the first are going to have your best rate. Then your second best rate is the state bond and the hometown heroes. They've got one interest rate that's available for all, whether your credit score is a 620 or a 680 or a 780. They also, Sharif, if you're on, this is about stacking. You can stack down payment assistance and in other words, put a third down payment assistance on top of a first mortgage and a second mortgage. You can put a third mortgage on top of it. And this is giving you this is why community seconds are the best to me, why the Florida Bond and Hometown Hero are the second best, and why proprietary come in on a close third. And seller contributions are acceptable for all of these programs. And then finally, I can't say enough about Down Payment Connect. I have had this program and I'm not getting any monies from this. So when I see something good, I have to tell everybody. Down Payment Connect, I've been using for the last 4 or 5 years, and I am in it every day. And it is by far the most comprehensive program. It's better than the websites that you see for these DPAs that don't have everything together and they don't know what us loan officers need to see all in one shot. So these are the, oh, and by the way, the MLS realtors, you can get the directory. I'm pretty sure, Sean, tell me if I'm wrong on this, but they can get the directory through or DPC through their Stellar or their MLS, right?
A limited version of it. Yeah.
Okay. And that's the other reason why you want to have Down Payment Connect. There's a Realtor Down Payment Connect that is a subscription base as well, but the DPC that I have has all the programs that are and quite a few wholesale, more wholesale coming on as well. The other thing is that there's things that we want to know, like will that second mortgage resubordinate if I want to get my borrower a refinance of their first mortgage? Most of the community seconds will do that. And so there, read this, what you get extra out of Down Payment Connect, what you find out on the sheets that you get for the direct in the directory for each program. They're all in the same format, and frankly, sometimes I'm telling DPA programs something that they don't know because uh, it's not it's all together and I've got a lot of detail on there. Um, Things to be aware of up front. When you do a community second with a first mortgage, that's two mortgages. And or if you stack a third onto a first and second, which I just did with FBC. I did a hometown hero with their second, and then I put Pasco County ship loan on the top. That's two submissions. So be prepared that that's two processing costs that you're going to get. The second processing cost is typically about 275, but let me tell you, it is worth it for these processors to do these. They've got to look at two sets of detail, just like you do if you've got two different programs going on. Um, the so basically take a look at this. Now, if you just use down payment resource, these are the questions you want to ask the down payment provider. Because a lot of times, you get a borrower, you don't know that you're supposed to go to a class and get information done or get the borrower approved up front or get yourself as a loan officer approved up front. And then the borrower goes out and signs a contract and voila, you cannot get that DPA any longer. So these are, if you don't use Down Payment Connect, these are the questions that you need to ask the service, the program, just to make sure you don't get caught in a problem and already have a contract written. And then finally, I've got just two or three things here on stacking DPA. You can read that if you're interested. But again, that is available. And I've done that with both UWM and FBC. And then I am putting more assets in here. But this is it so far, and this will be added to. So if you want to bookmark this page, um, this is where all of the DPA information that we all gather together is going to come together. And then I think what I'm going to do next, if it's okay with you, Sean, is I'm going to hand it over to Ron Carter with UWM and also Teresa McGowan with FBC. And so, Ron, you want to take it away? And unmute yourself first. There you go.
Yeah, they were, and then I'll share my screen here. They were, and then did that request come through just to be able
Yeah,
to share it? So
Pam, you might need to stop sharing yours.
Oh, I'm sorry.
That's okay.
Oh crap. How do you unshare? Oh wait, there, stop share. Okay.
Are we good now? So then, thanks for everyone for having me, Pam, and everyone. Just to echo what Brian said, Pam really is a wealth of knowledge when it comes to this stuff. So the best part I like about it with her is that it's a passion, right? You can see it. She truly cares, and it shows, and she is making people's lives better. But a couple notes I jotted down just from saying tools that we offer that could kind of help with this. So first, I saw that Pam had mentioned that you're going to need to get a verbal verification of an income on people. You should get that up front. We actually offer that in our platform for free for everybody too, where you can pull. We call it a VOI or verification of income, where you can. It's a pretty much a written BOE. You could do it either through the work number or through Equifax, and it will pull the VOE for you. It's completely free that we cover it. As Pam mentioned, we have credit expert where you can upload a credit report and we can kind of give you that path to get a desired credit score. But on top of that, you can also do it with our Safe Check platform, which is a soft pull. So that credit trigger won't happen that, then could lead to them getting unwanted soliciting if you were to pull a hard credit report. And then when the file gets in process, we actually cover the cost of the full credit report for you guys. So they just pay for the soft pull up front. You can upload that even to the credit expert through our platform as well. And if we needed to get them worked on, so then now you didn't get them with a hard credit pull while they work on something. And then we will cover the cost of the credit report when it gets in here. And, kind of some stuff that Pam had given me to cover is the first one I want to kind of go into is that show you that income calculator tool she was talking about. So this is a new tool that we actually rolled out at the AIM event in Nashville. So it's, from what the feedback I've gotten, it's probably one of the better income calculator tools out there. I've used it myself a few times, and it came up with the exact same answer that the senior underwriter was getting on files, and I was using it, obviously to try to argue against them. But then, when they come up with the same number, it kind of, negates that. But it's a very useful tool. It's something that, if you've used us in the past, like you say, okay, submit a TBD scenario. This is even the same tool that our underwriting escalations team is using as well. So it's on there. It's completely free to use for you guys, and kind of take a look at this is what it looks like. And you can kind of fill it out, and then you can pick your income types, and you upload your docs to it. And I mean, if we just kind of wanted to go through it just to see. And then you can kind of go through and pick it. We're going to use the pay stub, for example, and then it will take you through each screen. And you can either upload it or manually enter the information that you see on here. And then as far as the community second stuff goes, Pam had said that, we have a list on here already, and this list is growing every day. So we do have a process to where if you come across one that's not on here that you've used with other lenders or you've seen used in the past or that you want to use, we have a process that we can get it added to this list. So it's not a, concrete list that, this is all we will do. So since we're kind of, just delving into this round a little bit, Pam can tell you probably a year ago, I was probably one of her biggest opponents to DPAs. I didn't see as big a benefit, and she turned me into a believer in it too. So it's, just like that. I mean, we didn't do a ton of them before this, but now, obviously with the amount of loans that we see come through our doors, we're seeing those numbers increase. So it's like, I think I pulled the numbers just to see before this, and I think I closed I think it was like 500 loans last year with DPA on it. So it was like, you're starting to see it across the country. So it is the word's getting out there, right? So you guys are doing a great job with that. But if you come across one that you want to get added in here, we have a process. Just reach out to me, and I will, I sent it to Pam. I don't know if Pam's going to send it or I can send it out to everybody after this. And we also have on here through the source too, kind of an underwriting job aid that you have access to that you can kind of look through and determine, like, if we need to get more approval on it, kind of see what they look into. And we have checklists for it on here as well that we can verify with it, but then we can help you get that done, and we can help you work with whatever entity it is offering that to help get that signed up and give your guys' borrowers access to that.
Thank you, Ron. That's and Ron said 500 last month or last year, and that had to be all community seconds with first. So that's pretty awesome. And I'm going to go over to Teresa McGowan now with FBC. And I've asked her to talk about the Hometown Hero and the Florida Bond. One thing, Teresa is, first of all, Ron is at the top of the list for UWM, doing the first and the seconds. And Teresa is at the top of the list for doing these Florida, the Hometown Heroes and the bonds. And she does a great job. And she also pays a lender paid 2%, which is not industry wide. So take it away, Teresa, and let us know where people can get information on these two products.
Sure. Thank you, Pam, first of all, for giving me the opportunity to address everyone today. I truly appreciate it. My name is Teresa McGowan, and I am with FBC Mortgage. And what I'd like to do is just take a few minutes to talk to you about the Florida Housing Down Payment Assistance programs that we do offer. As Pam mentioned, any of the Florida housing programs that we do handle are done on a broker-only basis, and it's a lender-paid comp of 2%. And with these programs, it's one rate, one price. There's no buying up or down. You cannot buy out any administration fees, so it's just one flat price. The programs that are offered is the standard bond, the standard TBA, the Hometown Hero bond, and the Hometown Hero TBA. On this document, and I will see if we can get it out to you after the call, I have given the link for the e-housing site. That site is a wealth of information. You could check it daily to see what the pricing is for the different programs. It has very in-depth program guidelines. It has cheat sheets where you can do comparisons. It's really if you want to familiarize yourself more with the programs, they really have some phenomenal information on their site. But for all of the programs, all four of them, there are a couple of basic guidelines that exist for each of them. You do always have to have a 640 minimum FICO for anybody on the application. The program max is going to be 50%, whether it be a conventional loan or a government loan. The little caveat to that is the program does allow you to round down. So on an FHA loan, you could essentially go up to a 50.49 because they would round that down and consider it 50. But if it is a conventional loan, it's a flat 50 max. The only time that varies is if you were going to do a manual underwrite, then it's reduced to 43, or if it's a manufactured home, then it's a 45 max. Anybody on the transaction must be a first-time home buyer, and they must be purchasing a primary residence in the state of Florida. The way this down payment assistant works is there is no payment there is no payment on the loan. But if the borrower refinances, if they move out of that property, or if they sell the property, they have to repay it back in full, and they can only use this program once. So if they used it once and now want to buy another property, they could not utilize it again. And then each of the programs does have an income limit, and that's based on the county and the number of people in the households where the borrower is purchasing. If your borrower does exceed that limit, they unfortunately would not qualify for the program. And Pam mentioned the income calc for the SHIP programs, and that is very similar to how the income is calculated on these programs. You're going to potentially have two very different numbers. You'll have the number of how the income calculation to determine if your borrowers meet the program max in terms of income. And then you're going to have the income calculation that the underwriter is going to use in terms of the underwriting piece. Very often they can be different numbers. When it comes to the standard, the bond versus the TBA, there are three major differences between the two. The bond program is going to have slightly lower income limits than the TBA program. So if you find you don't qualify for bond, you can go and see if you qualify for the TBA. The second difference is how you document that you're a first-time home buyer. For the bond program, you have to prove that by either providing tax returns or transcripts. And then the third difference is how they look at the income. For the bond program, it is household income. So if I'm married, but if I was buying a home and I didn't want to put my husband on the transaction, even though he is not on the loan, he is going to be residing in the property with me and he is over 18 years of age. So that income would need to be looked at in determining whether your borrower exceeds the income cap for the program. So if there's a spouse or anybody 18 years or over that will be residing in the property, you have to incorporate their income when determining if your borrower meets the income limits for the program. For the TBA, it is solely whoever's on the application. So if adding my husband would make me go over the limit, I would just keep him off, and that is fully acceptable to do that on the TBA program. So those are the three main differences. The bonds, the standard bond and the standard TBA program, the down payment assistance monies that is available is a flat 10,000. So regardless of the loan size, the second is going to be in the amount of $10,000. Okay. The Hometown Hero program has many of the same, whether it be TBA or bond, they have a lot of the same guidelines. Where it differs is in two main points. First, in the amount of the down payment assistance. For this program, the down payment assistance amount is going to be 5% of your total loan amount with a minimum of 10 up to a max of 35. So there is potential for your borrower to receive more assistance on higher loan sizes. The other main difference is the fact that it's called Hometown Hero because this program is designed for people in very specific occupations. Generally, this list is not exhaustive, but it's going to be as somebody working in a K through 12 school. It'll be healthcare workers. It will be law enforcement, court employees. On their website, and there is a link on this page to it, Florida Housing does put out an eligible occupation checklist that talks through the fact that who would be eligible, as well as ensuring that for this program, not only do you have to be in an eligible occupation for the Hometown Hero, but you have to work full time. Now, the employer determines what's considered full time because we have some people that are considered full time at 35, some are 40. They have to be a full-time employee. They have to work at a brick and mortar location in Florida. All of these items need to be verified. So if it's not evident from the pay stubs, we need something from the employer clearly stating that the individual works full-time, where they're based out of, and that they go into that location for their employment. Remote workers are no longer eligible for this program. And if you have somebody who has an offer of employment, potentially they're relocating from another state, you cannot use an offer of employment to qualify. You have to have started the job. Okay. If you do have a self-employed borrower, you still do have to determine that they're full-time. And in that instance, your borrower can use either their CPA, a bookkeeper, or a tax preparer to confirm in writing that they are indeed a full-time employee. And then finally, for the Hometown Hero program, a veteran does not have to be in one of the eligible occupations. They have a little bit more flexibility with them. They do have to work for a Florida-based employer, and they do have to be full-time, but it does not have to be in one of the eligible occupations. And in doing these programs, I have found that the most important thing is when you're packaging the program or the loan for delivery for underwriting is to really make sure you have the appropriate documentation, especially on the Hometown Heroes. You should have evidence that they're a full-time employee, that they're working out of Florida, and if there is supplementary income, whether that be overtime, bonus, commission, you really should have your written verification of employment in the file at the time of underwriting. We want to make sure that the underwriters have the information to come up with a correct income figure to ensure that your borrower does qualify. And if that means that you have to wait another day before submitting it, I really encourage you to do that, because it's going to be a much cleaner approval, a smoother process, and it's just going to be a better transaction all the way around if you take that little extra time to make sure you have the information that's needed to be able to make an informed decision for our underwriters. But I think I've kind of went over a little bit over my 5 minutes, so I apologize, Pam. But thank you again, everyone. And if these programs are available to any loan officer who is approved to do business with FBC. There's nothing special that you need to do to have access to them. So I look forward to working with you, and please don't hesitate to let me know if there's anything I can do to assist you. Thank you, Pam.
Thank you, Teresa. And I think that we are almost ready to get the close here, but have questions available. Basically, the last thing I wanted to let you know, some of you have told me that processors don't want to process these loans, or they're too cumbersome, or whatever the reason is. I know some of you are processing them yourself. I wanted to let you know, and this is on this DPA page at clientstohomeowners.com, that Sales Tracks, Justine Vega with Sales Tracks has, they've got processors that can process these loans. It doesn't mean, your processor, if they don't want to process them, they'll probably be relieved that there's somebody else that will do it. But so don't be afraid of taking these loans because you don't know how to process it and your processor doesn't know how. Justine's information is on the website, and so is Ron Carter and Teresa McGowan's. So definitely partake of these folks. This was just to give you a little put the toe in the water on down payment assistance today. And I think that if it's okay, can we just open it up for questions, unless there's something else we need to? I think we've covered everything, and we're almost out of time. We got 3 minutes, unless people want to stay on for questions and answers.
Joseph Gabriel had a couple of questions. The first one was he wanted to clarify how to find programs that loan officers cannot do. I think in the case that Innovative Mortgage would have to be an approved program provider. So I'll show you quickly where in Down Payment Connect, because that was the other part of his question, where you find that. So when you're looking at the directory and you're looking for programs, if you open up the details of a program and you go to provider, we actually show you there what the lender participation requirements are, if there are any. So here, there's training required for the LO, but the company doesn't have to get signed up. So, and there's actually a filter for this stuff on the previous screen. And lender participation requirements, you can just say no. I want to see programs where there aren't any, and filter that way. And I'll just go ahead and run that. So there you go, 55 in Florida that just have no lender participation requirements at all. And then if it's just a training requirement, that doesn't mean that Innovative has to go get approved. It just means that you as the originator have to go to a class or a webinar or something like that. And then he had another question. Let me go back to that. Where was that, Joseph? I think it was for Teresa. Does FBC support the Florida Housing Plus program, forgivable after 5 years?
Okay, I did respond in the chat. Right now, we are not participating in that, but I will revisit it because things change all the time, and that might be an opportunity for us. So I will get that information back to Pam once I confirm if it's something that we're open to now. And then I did see that somebody else did ask a question about, can a vet qualify for the Hometown Hero program if they have, I'm assuming SS is Social Security income. Unfortunately, the vet would not qualify for the Hometown Hero program if that was their only source of income, because the vet does need to be employed full time. However, the standard bond or the standard TBA does not have that restriction. You do not have to be employed full time, and you can be retired for those programs. So that could be an opportunity, one of those two other programs, the standard bond or TBA, but unfortunately not the Hometown Hero.
And Teresa, just in case it helps, that was Sue Hale. In case
Oh, okay.
this is how Florida designed the Hometown Heroes program, right? They had a very specific mission in mind. That's not an FBC only.
Yes. Yes. And thank you for bringing that up just to share with you. I know that there are some other lenders out there that offer these programs and they have their own overlays. FBC has no overlays to the program. We're going to comply with everything that Hometown Heroes would allow. So that, thank you for even bringing that up so that you're aware of that. And generally, if the agencies are HUD permitted, so does Florida Housing. So they don't really not, I am not aware of anything that they impose over conventional or government guidelines either when you're utilizing these programs, other than the distinct guidelines that the program warrants. Thank you.
Let's see. Edgar offered kudos for Justine at Sales Tracks. Let's see. Carrie asked for multiple states. This is for Down Payment Connect. Do we need a different subscription for each? No, one subscription up to 4 states with Down Payment Connect. If you need more than 4, then just reach out to us and we'll talk through those needs. Let's see. That was Teresa responding. Carol thanked everybody. Pam, you're a rock star. We all agree. Dan, I'm not sure if this is okay. So Dan had a question. The Florida Hometown Heroes program requires the loan officer to be a Florida resident, specifically have a Florida driver's license. Are most DPA programs the same or no? And Dan's licensed in Florida but lives in North Carolina. Dan, that's going to vary. And actually, you'll see information about that where I just showed you how to learn about whether or not the company needs to be approved. We track requirements like that as well. We call that a brick and mortar requirement. Essentially, does the loan officer or the lending institution have to have a physical presence in the market where the DPA is? And that varies. And frankly, that's one area where a lot of DPA providers are willing to make exceptions and increasingly so with any of their lender participation requirements. So sometimes would be the answer, but that's one concession they're more likely to make than others. I'm looking for questions. A lot of kudos here, more for Justine, more for Pam. Can the DPA be used with 203K purchase? Siobhan, not sure if that was about a specific DPA, but there are some DPAs out there that you can use with a 203K. There are even some DPAs that offer assistance in the form of property rehab or property enhancement money, not just down payment or closing costs.
And if you don't mind, I'll answer that for the Florida Housing. We do not pair the Florida Housing programs with a 203K.
Okay, and then Sue asked if we could have a copy of the chat. Unfortunately, Zoom is not good about that. So grab what you need from the chat now, including links. And Tracy or Lori, can you post our email? Pam, Teresa, Ron, if you want to post your contact information in there so people can grab that real quick before we hop off. Let's see. How is family size verified? Mark, that's going to depend on the program, but generally it's the number of people living in the household, including dependents, and that doesn't necessarily just mean children.
Can I just add to that? How they do that is they get the tax return and they look at the top of the front page.
All right. Let's see. I'm looking for questions. Sorry, there's a lot in chat. I'm pouring through, making sure we got to everybody's questions here. How could we get help with the TBA Plus from Florida Housing? So I think Teresa, if you can put your contact information in there, and then Ron, if you want to, okay, there we go. Ron's email is in there. Teresa's email and phone are in there. info@downpaymentresource.com if you have questions for us or about Down Payment Connect. And so if you guys want to screenshot that or copy that out of the chat real quick, it looks like that's it. Ron's got his phone number in there as well. And let's see, is this a question? User experience. I'm not sure. I don't think that's a question. Um, okay, so I think that's it. Pam, if you want to wrap things up, we've covered all the questions that are in there as of yet.
Sorry, if I can intervene for one quick second. I'm trying to catch them all, but those of you that were leaving contact information, if you're a host and panelist, can you make sure that you switch it to everyone so everyone can see? Because some of these contact informations, I was trying to grab them all and send them, but it'll be quicker if you guys just do it yourself.
Got it. Got it. Okay, I think we're going to get a recording of the webinar, right, Sean?
Yes, we will
Yes.
send that to you, Pam, once Zoom processes it, so late today or tomorrow.
Okay, awesome. And what we'll do is we'll put it at the clients, the number two, homeowners.com, clients2homeowners.com. I'll put it in there in a minute. And it's on DIY down payment assistance. I'll put the link in there, but we'll put the webinar at the very top of that page. And continue to send in information about changes on DPA or wholesale DPA that we can have Down Payment Connect go and take a look at. Tim, I know you're on here, so hopefully we're going to get other uh, companies that are wanting to do DPA, whether it's wholesale combined first and second, or if they will just allow the community seconds on their first. Ron and Teresa and Justine and your team, I thank you so much for being on this. You guys are the rock stars of the DPA as far as I'm concerned. And I will tell all of you, I could not do DPA at all without Down Payment Resource and Down Payment Connect. And I highly, highly endorse Down Payment Connect. And that's it.
Good deal. Thank you, everybody.
Thank
Ron,
you.
very much.
Thank
Pam,
you.
Bye,
Trish,
everyone.
Okay, thank you.
have a good
Bye.
day, guys.